start with you. Okay, here we go. Welcome. You're listening to The Best of Investing on Talk 910, the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And you guys are going to be kind of interesting to hear about one of the items that I brought in that I thought was a little unbelievable, so stay tuned to that. I'm your host, Edward Brown. I'm proud to house my co-host, Mark Hanf of Pacific Private Money, California's fastest growing mortgage investment firm. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. The vacations are free. They will only request a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. Today's trivia theme is World War II. All right?
I wasn't alive then, but
but you'll probably know at least 1, maybe 2 of these questions.
Kramer might be helpful on that one.
Maybe. We'll have to have him chime in. Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show on television, Comcast Channel 26 and AT&T Channel 99, Saturdays at noon, Sundays at 6 p.m. You can watch us on TV at noon and then listen on the radio. Of course, there'll be different shows because Mr. Kramer has to do his editing, but that's okay.
That's true, so it won't be a repeat.
It won't be a repeat. Okay. So, Mark, give us an update, please, of real estate and what you're doing.
Well, at Pacific Private Money, that my private lending company that I've been founded in 2008, we've been in business for 6 years. We're having like one of our best months ever. So June is just on fire, and it's amazing. We just have a lot of loan activity coming in, and a lot of a very specific type of loan product that we're doing this month, which we'll talk about a little bit later on in the show, and that is the owner-occupied purchase loan. We call it our bridge loan, and it's for people who are falling out of conventional financing, and it's just amazing how many transactions are in trouble because the borrower, something happened with their qualifications. We can go through some of that a little bit later, but it's a real busy June. I mean, the realtors are talking about all the listings they have, all the activity, all the closings. So, Bay Area really is on fire, and it's interesting because, and I've talked about this on other shows, there's this one blog that I read regularly that keeps predicting that we're at the top of a mini bubble, a post-recession mini bubble, and that we can expect pricing to ease up and maybe even go down 10-15% a year from now. But there is just nothing to indicate that that's even remotely on the horizon.
Well, I think what's kind of interesting is that your business is doing very well in June with a lot of activity, but it seemed like real estate from a sales standpoint slowed down, typical during the summer months. But why specifically is your business so busy right now?
Well, private money as a lending source is extremely important in today's real estate financing environment. It is because, and most people don't realize this, after 2008, when we had the whole crisis and the meltdown and all the subprime mortgage meltdown, banks really started to, the pendulum swung the other way in terms of the loans they were making. In 2005 and 6, they were making loans to anyone and everyone. We all have stories or know people who bought, gobs of property, and just lied on the loan applications, or the mortgage brokers lied on the loan applications just to get them, a loan, 100% financing based on your credit score. It was easy. And then after 2008, the pendulum swung in the other direction, and the banks really stopped making a lot of loans that they were making hand over fist in 2005 and 6. And really the segment of the marketplace that got hit the hardest was the real estate investor. So although they made it much harder for you to buy a primary residence, they now started, get this, underwriting your income and making sure that you were actually making enough money to afford the loan. But they really stopped making loans to real estate investors. And so that gap has really been filled by the private lending community, aka the hard money lenders. So at Pacific Private Money, I'm a hard money lender, but I don't refer to myself as one. I refer to myself as a private money mortgage banker and broker. Okay. I like the softer, easier, to quote quote George Bush,
Oh,
senior.
yeah.
I believe in a softer, easier hard money.
Yeah.
But it really is in many ways. It's less expensive. It used to be a lot more expensive to borrow. I mean, I remember when I was working for my dad's development company, we'd often pay 10 points for a hard money loan, and nowadays we're making hard money loans for as low as 2 points, which is not that far off paying 1 point for a home loan. So really, we're it's no longer the predatory lending environment, and it's also now no longer the lender of last resort, which was what a lot of people refer to the hard money industry, the lender of last resort. The guys that were just making the equity only loans. Well, we're not doing that. We're really underwriting the borrowers. We're underwriting the real estate. We're doing up to 70%. So we're really, in many ways,
you're doing just what a regular bank.
Well, and we're a little bit more conservative than the banks in terms of the equity. We want the borrower to have a little bit more equity than the banks. The banks will go to 80% regularly, where we oftentimes cap it out at 70%. But we do less underwriting of the borrower. In fact, we're okay with the borrower having glitches in their credit and all of that. But so that's why we're busier. But you know what I wanted to talk about in this segment is an article that I pulled out specifically for the show from the Chronicle, and this is in the business section. It's twice a week. In fact, it starts out, it says, twice a week, the Chronicle features a local home on the market that caught our eye for its architecture, history, or character. That's the lead. Okay. So the home I'm going to share with you has neither special architecture, history, or character, but it is a blatant, unbelievable example of irrational exuberance in certain market segments of the Bay Area, thanks to the tech dollars that are out there looking for real estate.
Back to the .com where the kids and skateboards and the hat backwards come.
So get this. This home is in Palo Alto.
All right.
It was formerly, when you and I were growing up, a middle class neighborhood. It's all of 3,100 square feet. Built in 1949, so nothing special about it so far. Okay. It's been nicely remodeled, but nothing special. In fact, it says the master bathroom has a walk-in shower and jetted tub. Well, big deal. Who doesn't? Yep. French doors that open to the garden. Okay, big whoop.
How big's the lot?
The lot is. I'm looking. It's not that particularly large. In fact, this is just a run-of-the-mill cookie-cutter residential property, 3.5 bathrooms, three bedrooms, 3 bathrooms, 3,100 square feet. Asking price, again, this is in the city of Palo Alto, $5 million.
Pesos. No, $5 million for that?
Palo Alto, middle class neighborhood.
$1,600 a foot.
Here it says, don't miss the schools. That's all they can say. Don't miss the schools. So they're selling this. So I couldn't believe when I read the article. So I went and I pulled up the MLS, went to the tax area, and pulled up the information on the rest of the homes on the street. Yeah. The tax assessed value on every other home on that street is less than $1 million. And this, whoever bought and I did find out.
Someone actually buy that house?
No, it's for sale.
It's for sale for that. Okay.
So the sellers bought the home for $2.5 million. Renovated it and put it on the market for $5 million.
How long ago did they buy it?
I don't have that in front of me. So within the last 2 years.
Really?
So anyway, $5 million for a okay, not great, 3-bedroom, 3-bath, 3,000 square foot home in Palo Alto. So
that's amazing.
I doubt they're going to get this price, but it's obvious why.
Just the fact that they're asking it is a little bit ridiculous.
Yeah, I mean, we've heard of price wars and multiple offers and bids over asking, and this is just the Bay Area is full of tiny little submarkets that almost go on a street by street basis, and
that one's not going to be a feeding frenzy. I can't imagine going over.
Probably not, but somebody is obviously hoping to hit a home run on maybe their first and only flip. So
yeah, really, that's ridiculous. Tell you what. Stay with us. We're going to cut to our first commercial break here. When we come back, I'm going to ask you for the deal of the week.
Oh, we got several to talk about.
Okay. Here's our trivia theme is World War II. In 1939, what country was invaded by Germany, unleashing World War II? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Which country was invaded by Germany, unleashing World War II? Don't touch that dial. The Best of Investing will be right back.
Mark, for a cutaway, could I have you hold that up to me? The reverse side? Okay. Does it have a picture or just that?
It actually does have a picture.
Okay. You just hold it up and...
Can you see it okay, or is it upside
yeah,
down?
no, that's good. 1, 2, 3, 4, 5. Thank you. That's great. I'm going to call that number because I know the answer. See, 1-800.
And I'm embarrassed to say I'm not sure. Now I can guess.
Okay. That's
France,
okay.
Spain, Italy.
Nope.
What?
Don't,
No.
don't tell him.
Check?
I said no.
Check, no check.
Germany.
Check, no check.
Who's next to Germany? There's
Okay, I can't.
Australia.
I'm not supposed to talk.
Spain.
No.
I don't know. Gosh. France.
Let's see.
Hawaii.
And you and you know realistic.
Can I give him a hint?
No. No hints.
Oh, this is a great hint.
He's gonna embarrass
No.
me.
Oh, this is a good hint. Please?
Go ahead.
Pretty please? How many men of a certain nationality is it?
Polish. Poland. Screw in a light bulb. Yes.
He's got it.
I had a couple of really funny ones that how many psychiatrists does it take, It's pretty funny. I
That was
can't
good,
remember
great.
now. Okay. Okay. All around the Mayberry. Poland. Okay, here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn, the famous president of Pacific Private Money, California's fastest growing private lender.
I'm not up for re-election.
That's right. It's a dictatorship.
That's right.
Okay, we get to the first commercial break. We asked this trivia question about World War II. In 1939, what country was invaded by Germany, unleashing World War II?
Well, I only know it's Poland thanks to Kramer.
Yeah.
He started to talk about something about light bulbs and I won't
That's
go any
true.
further.
Okay, so yes, that is correct, Poland. Okay, Mark,
Yes.
give us the deal of the week.
Well, let's go ahead and finish talking about what I started to talk about
Okay,
in the last
okay.
segment, which is how we've gotten really busy
Oh,
this
yeah.
June. And so the deal of the week are actually that it's the one I'm going to share with you is one of 3 similar deals we all got this week, and these were loan requests by a borrower whose loan request for their bank to close on a primary residence purchase was running into trouble. And so we got 3 calls this week, and all of them, in fact, one of them was another fast close. In fact, I wired the funds on Thursday and closed on Friday. We got the call on Tuesday. So,
Wow.
one of them's to the tallest borrower we've ever made a loan to, 7'2".
Really? What, is he a famous basketball player? Or?
7'2" with an 801 FICO score. Not a basketball player, no, interestingly enough. And his situation was that he had multiple businesses and multiple LLCs, and he had money deposited in all kinds of different business banking accounts. Now, this is the second time we've had a situation like this. He is thoroughly bank financeable,
Yep.
but at the last minute, the bank got uncomfortable
Yep.
with the fact that he didn't have all of this money in his personal checking or savings account. So it was a source of funds issue that
Yeah.
somehow or other, as loans are getting approved, as they go up the flagpole for the approval process.
I wonder if they think that there's some unsavory things going on, or they just don't think he's, either legitimate or organized.
You know,
What do you think is from a bank standpoint? What's their issue?
well, I don't actually come from, and you know this, right? I don't come from the banking or conventional mortgage loan origination industries. I come from real estate development, so I came into lending actually from the other side of the table, which is one of the reasons why I think our company excels is that most of us in our company are actually experienced real estate investors, and so we kind of speak the language
Yeah.
to the people we're making loans to. Although in this case now we're talking about primary residence acquisitions that are stumbling thanks to the tougher banking regulations now. But so you'd be asking me really at this point is to hazard a guess. And when I ask the broker who calls me, because it's his client, saying, "Hey, can you help, save my client's deal?" I ask the question you're asking me: what is it with the banks?
Well, first of all, what's the price of the house? Based on
So it's a $350,000 loan on, I believe, 500. I'm sorry, I didn't bring all the specs.
So 70%.
Basically, yeah, all the loans we're making this week, all of them. Actually, the second one was the one to the another loan we did was actually 55%. So that was actually an exceptionally good. So it's a $500,000 loan on a 55% loan to value. I think the purchase price is like 905. It's just kind of an odd amount. So
there's real skin in the game.
Real skin in the game
by these guys.
Yeah. So this product that we started promoting about a year ago, and it's really taken off. In fact, when I did an email blast last week to my network of referral brokers and realtors, I immediately got about a dozen phone calls from people who said, "Oh, I'm so glad you called. This was on my desk." And it's kind of funny when I get that call, I'm thinking, well, why didn't you have me on speed dial before? It's like, because it just we're all busy,
out of
right?
sight, out of mind.
Out of sight, out of mind. That's exactly right. I have to keep reminding people, hey, even though the private money lending industry over the last 5 years has been mainly focused on people who are buying, fixing, and flipping investment property or collecting rental properties or maybe commercial properties, we're now really coming back in a big way to help the consumer in this new Dodd-Frank era of very tight and restrictive lending policies. And so there's just, maybe in the grand scheme of things, of all of the real estate transactions that are happening on a monthly basis, the people that are calling me in a panic are probably a very small percentage. But if it's your transaction, and you've got a deposit, right? If you've got a $25,000, $30,000, $50,000 non-refundable deposit, and all of a sudden you find out the banks is going, whoa, wait a minute, we're not going to be able to close for you in time, and the seller is saying, hey, I've got 3 backup offers, and one of them's all cash, and I gave it to you.
I'd love to keep your non-refundable deposit and move on.
That's right. So it's really it's almost like this is business type of atmosphere where I get these calls and I feel for the people, and more often than not it's they've got money in the bank, they've got a high FICO score, but there's something going on. And in one case we talked about it, on a deal we did a couple of months ago, was the fact the guy was making gobs of money, had a great FICO score, but he was in the middle of a divorce, and he was looking to buy a property, happened to be in Napa, and he couldn't close because the bank couldn't get comfortable with the fact that, regardless of the fact that he made more money per year than the amount that we were lending to him,
I love that.
he was going through a divorce and it wasn't finalized yet. They were saying, look, we can't make you this loan until it's final. Well, he knew it was going to take another 6 weeks, and he was going to lose a $50,000 deposit if he didn't close. So we came in. So I know that the borrowers, these are mostly consumers. These are not necessarily real estate investors. So oftentimes they'll get a little sticker shock, to put it bluntly.
Well,
to put it mildly, I should say.
Share with the audience what you would charge, or what do you charge Mr. 7-footer?
Right, exactly. So I was gonna go there. So basically, our owner-occupied bridge purchase loan program, as we call it, it's 9.9%. It could be lower. It could be 8.9 on a lower LTV, but generally it's 9.9% note rate. The payments are interest only because it's a short-term loan, less than a year. The points are 2 to 3. So on a larger loan, we'll go down to 2. On smaller loans, it's 2 to 300.
No prepayment penalty.
No prepayment penalty. So yeah, it's a little bit of a it hurts to know that as a consumer.
And your motto is "Give till it hurts," right?
Give till it hurts, right?
Your charity.
Yeah. So it's an option, and for the most part, when we help a family close on an otherwise endangered transaction, regardless of the fact that their first reaction to the pricing is to go gulp, and or maybe a few other choice words. Usually by the time we quit, but by the time we close, they're pretty happy.
Okay,
Because
so
again,
you don't need to wear a bulletproof vest then. Just when you quote them, not when you actually give them the money.
Yeah. So for for more information, we're talking about private money as a source of financing for real estate acquisitions, whether you're buying, fixing, and flipping, whether you own income property and the bank is no longer interested in giving you a cash out loan. We do those all the time. Commercial property, multi-unit, like any 1 through 4, even 5, 6, 8 units, duplexes, fourplexes. Like I said, purchase, refi, and we've been talking about the consumer bridge purchase for people who want to buy a house and their bank is making it difficult for them. Give us a call at Pacific Private Money at 415-883-2150. That's 415-883-2150. Or of course, go to our website, pacificprivatemoney.com. That's of course all one word, pacificprivatemoney.com. And we're really good at just listening to your loan scenario and telling you literally within a minute. We can tell you approximately, what pricing if we can do it. Number one, and number two, if we could, here's what we think the pricing is. We're really good at drilling down and telling you within a very close margin, and more often than not, whatever price we give you over the phone, that's when we end up closing it. Because again, we do this a
No,
lot.
I know you don't bait and switch.
Well, and we know the Bay Area really, really well. All of us are natives of the Bay Area. It's the only place I've ever lived and worked in. I've been in the real estate community, business community in the Bay Area for 32 years now, and so I know the neighborhoods, and we lend all over from Santa Barbara all the way up to Redding and up to the Tahoe. In fact, we closed a Tahoe deal, a nice home in Truckee, actually, not Tahoe, but last week. So again, give us a call. Never any obligations, never any upfront fees. We're really easy to talk to, and we'll just tell you exactly what we think we can do very quickly. We won't waste your time.
And we're going to go to our second commercial break. And when we come back, I want you to tell the audience if they wanted to invest with you, because those high interest rates, it's like, well, if I'm on the other side and I've got money and I want to invest, I'd like to be able to participate. And you do allow investors.
Right. So let's the next segment. Let's talk a little bit about being a private lender, because we've got an event coming up in just under 4 weeks that you can come and have some good food and drink and listen to a nice little presentation. Beautiful area.
No, not only no obligation, no charge too, I believe. Okay, but actually before we, no, you know what? Let's go ahead and just cut to the second commercial break. And the theme is World War II. You ready for this one?
Mm-hmm.
On what ship was the final surrender of Japan signed? The USS blank. Okay. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. On what ship was the final surrender of Japan signed? The USS, and then fill in the blank. And don't touch that dial. The Best of Investing will be right back.
I bet Kramer knows that one.
You know that one, don't you?
Not really. Enterprise? Kitty Hawk?
Captain Kirk.
Captain Kirk.
General Douglas MacArthur was there. So was I.
That's right. Yeah.
I was there.
Sure. In fact, what are you doing there, my friend?
I'm sending a live video to my friend.
Oh, live video. Which friend?
My lady friend.
Oh, a lady friend. Hello, lady friend.
Okay. Somehow I screwed that up. I'll go. I didn't go.
All righty. Ready? Yep. Have a quick one little announcement.
Okay.
Okay. Ready? Yep. Away we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money. When we get to the second commercial break, we asked this trivia question regarding World War II. On what ship was the final surrender of Japan signed? The USS?
I wanted to say Enterprise.
Captain Kirk. He was not there, my friend. He was
There's
not
a real
there.
ship called Enterprise, isn't there?
Actually, I think there was. No, the USS Missouri.
Wow.
Okay, I guess
I forgot
Truman's hometown or something. Okay, one quick thing here. Next week, or actually, excuse me, this week is another trivia contest where the winner is going to receive a 2 night stay at the beautiful Hyatt Palm Springs. It's Valentine's Day every day at the Hyatt Palm Springs. Couples can indulge themselves in a relaxing and romantic atmosphere that will create memories to last a lifetime. The Hyatt Palm Springs Romance Package includes complimentary bottle of champagne, chocolate-covered strawberries, and a playful romantic gift to make any guest's stay more memorable. The package also includes full breakfast for two each day, as well as late checkout and from the all-suite room. The guests can take advantage of the pool and cabanas, the fitness gym, newly refreshed hotel restaurants, and get this, the room rates start as low as $159. The total package valued at over $300 represents a 47% savings. Check them out, Hyatt Palm Springs. They're down very close to the heart of downtown Palm Springs. www.hyattpalmsprings.com or call 760-322-9000. Okay, here is the trivia question. And I'll give you the rules too. Almost 25% of us have done this very dangerous thing. What? All right, now here are the rules. No previous winners on the Best of Investing. You have to email edward@bestofinvesting.com the answer to that question by midnight tonight. Next week, we will report back to the audience who the winner was.
Nice.
Okay, so Mark, actually, okay, let's just get right into it. We told the audience that we came back, we were coming back, we we're going to tell them how they can actually be on the other side of the equation to actually earn some good interest for being a private lender.
One of the reasons why I like referring to our industry and my company specifically as private money lenders is because in a way it advertises the fact that we use private individual capital to fund our loans. We are not a bank, but we're not unlike a bank, because what does a bank do? A bank collects deposits and lends those out. Now the banks have, additional access to capital. They can go to the Fed, the Fed window and get money for next to nothing, and lend it out for, at 4 or 5% and make a huge spread, which is another story. I mean, that's they're happy to make home loans to consumers. It's one of the most profitable things they've been doing. In fact, they're making a higher spread today in their home loans than ever before. And but on the private money side, being a private lender is a lot easier than most people realize. In fact, most people, I would say, aren't even aware of this incredible opportunity, referred to as, part of the alternative investment category of investing, which includes like buying real estate, buying other, mineral oil and gas and those types of things. But unlike those, it's, in my opinion, much safer and much more secure, because when you are the bank and you're making a loan, you're really not making an investment. You're creating a financial instrument. There's collateral. So when the bank makes you a loan, even if they're lending you 80% of the purchase price to buy a home, it's a contract. It's a promissory note that you sign to pay them back with interest. And the security is recorded against your property. So they're not in a position, unless the real estate market changes significantly, they're not in a position to lose money. And that is the classic business model for the banking industry. So in the private lending industry, what we do is very, very similar. We have loan documents that are, for all intents and purposes, identical to those loan documents used by the banks. We have a promissory note. We have a deed of trust that's recorded in the county where the property is located, and then a bunch of other supporting documents. Because as you know, when you walk into a bank and sign a loan nowadays, there's about 75, 80 pages worth of stuff. We too have quite a small bundle of papers, and again, a lot of that is because we're now a fairly highly regulated industry. It's not the Wild West when you go borrow from a private money, aka hard money lender anymore. So, how do you be the bank? Well, I started my business in 2008 largely using the money of people who had been and done private money loans before. And a lot of times these are people who have like real estate experience. In fact, my first 10 10 investors were all like retired realtors and real estate professionals who knew real estate, were comfortable with it, and loved lending on it. And they thought this is the greatest secret that nobody knows about. I can make 10, 11, 12% back in the day, not so much anymore, but I can make 10% by lending it out, and it's secure. And I'm only lending out 50, 60, 70% of the value of the property. Well, nothing's really changed in that regard, other than
the interest rates.
The interest rates have gone down a bit, but not that much, and we're routinely paying 8% and sometimes more to our private individual investors, which now include just normal everyday people who are not real estate experts. That's the beauty of private lending today, is that because we've been in business, because we've got the reputation we do, we've done 700 loans, over 150 million in fundings. Only 2 of those loans have gone to foreclosure, and no one's lost any money investing with Pacific Private Money in any of the loans that we've originated.
Well, this fund you have is almost like a mutual fund.
Well, and so in 2013, we started, in addition to the individual trust deeds that we were originating and putting private individual capital to fund those, we decided it was time to launch a mortgage pool fund, which we did in 2013. We call that the Pacific Private Money Fund. And so we have been paying, we have been on a cash-on-cash monthly distribution basis. Our investors are getting 8.25%, and those who are allowing the money to sit in there because they don't need the monthly income, it's compounding, they're earning 8.56 to date. So,
okay, now we told the listeners before we cut to break that you're having a special event, which actually both of us will be at.
Yes, Wednesday, July 16. Again, Wednesday, July 16. That's just a little less than 4 weeks. We're going to have an event at Piatti Restaurant in Mill Valley, right off of Highway 101, really easy to get to. It's a beautiful restaurant, and we're having it upstairs in their room, which has these glass-walled windows facing Mount Tam, and at the time of day we're going to have it around 7 o'clock. It's going to be absolutely gorgeous.
Oh yeah, you're going to have food and drink,
and
right?
we're going to have food and drink.
No obligation, no fee for everyone coming?
No.
But people have to RSVP because space is limited.
Well, right, and I need to tell Piatti's how many people are going to be there, and we're ordering hors d'oeuvres and drinks to fit that, because I'm paying on a per head basis to do this, and we're actually going to be doing this on a fairly regular basis going forward, but the next one's July 16, and we have not picked the date after that. It'll probably be sometime in September. But it's a great opportunity for you to show up and learn about being a private lender and how you can earn 8% in your investment portfolio, or if you want to use your IRA accounts, you say we can take IRA money. There's really very few limitations in the type of money we can take.
So it'll be an educational seminar.
It'll be an that's exactly right. It's not a sales seminar. We're not going to be accepting any checks at the event. We're not looking for any commitments either. We're just really there to provide information about this private placement investment opportunity we call the Pacific Private Money.
But you know what the best part is? They get to meet the hosts of the Best of Investing.
Meet the host. And that's why we call it the Best of Investing, because quite frankly, in all honesty, I do believe that private lending is among the best of investing that's available today in this near zero interest rate environment. And hey, the stock market's doing okay, but is it, how much longer is it going to keep doing what it's doing?
I don't know what my crystal ball shows. Okay, we're going to cut to one more last commercial break. When we come back, I want to get into an article that I thought was very interesting about negative interest rates. And then we have an email we received from a listener for Mark that he will answer.
Very good.
Okay, so the theme is World War II. Here's the last trivia question. Forces from what country completed the capture of Berlin on May 1st, 1945? The first 3 callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. Call 888-912-1190. One more time, that's 888-912-1190 to answer this question. Forces from what country completed the capture of Berlin on May 1st, 1945? And again, don't touch that dial. When we come back, we got this very interesting article and an email question from a listener. You're listening to The Best of Investing. We'll be right back.
Poland.
I wish.
Those rascals came right back with a vengeance.
They were pissed.
They were pissed. That's funny. I mean, except for using the word pissed. I like your answer.
Is it a trick question? The Americans?
Hold it.
Italians?
Tear down this wall.
Japanese? Huh?
What are you doing?
Tear down this
Give him all
wall.
the answers.
He hasn't come up with it.
Russians.
Reagan?
Yeah, Reagan.
Mr. Gorbachev, tear down this wall.
Okay, I'll tear it down.
I went by St. Vincent de Paul this morning and rounded up about 30 of my buddies, told them July 19th, 7 o'clock, we're going to bring a bus. You don't mind, do you? I promised some dinner. We're marked going,
Yeah, okay.
Yeah.
How much you love us, huh?
okay.
Oh, what a guy, what a guy.
Yeah.
All right, here we go.
I got all the stupidness from you, Edward.
Thank you.
Thank you.
Welcome back to the Best of Investing. Last time, I'm Edward Brown, your host. Not last time, forever, just for the show. With my famous co-host, Mark Hahn from Pacific Private Money. When we cut to the third commercial break, we asked this last trivia question. Again, the theme is World War II. Forces from what country completed the capture of Berlin on May 1st, 1945?
That was those fun-loving Russians.
Fun-loving Russians. Exactly. That's what it says here. Fun-loving Russians. Okay. Let's see. Okay. So now here's this article I found. It said the European Central Bank's historic step announced Thursday. This was a couple weeks ago, actually. Slashing its interest rate on deposits to negative territory at 0.1%. And
Isn't that amazing?
Yeah, and that caught the attention of U.S. advisors. But whether it'll
Don't give any ideas.
Yeah. So I'm looking at this. I'm going, okay. So now we got to pay someone to hold our money.
Well, that's what a checking account is, right? I mean, you put your money, unless you have interest, charge-free checking,
yeah.
but I don't. And so money I keep in my checking account goes down every month, whether I
By a
use it or
service
not.
fee.
Yeah, by a service fee. So negative interest rates.
Yeah.
What do you know?
Yeah.
Wow.
Pretty crazy. Okay, Mark, we received an email from a listener. It says, "What can I do if I'm not an accredited investor?" So this person obviously knows a little bit.
Well, it's a perfect question to kind of dovetail off of our last conversation. So what we didn't get a chance to say is that certain investments in the private lending arena require that you have a certain qualification, a financial qualification. This is a government mandate on us. So for example, in our money fund, the Pacific Private Money Fund, which is a mortgage pool fund, that's the one we talked about that's paying a little over 8.25% on a distributed monthly basis. We can only accept investors who meet the financial threshold of accredited, and that's a term used by the SEC. An accredited investor is someone who has a net worth of at least $1 million, and you're not able to use the equity in your home in that calculation. So it has to be $1 million, not including the equity in your home, or you have to make $200,000 a year or more if you're single, $300,000 if you're married. So that's the qualification to be an accredited investor, and that happens to be our qualification for you to participate in our mortgage pool fund. However, if you're not accredited, meaning you don't qualify under any of those two thresholds, the $1 million net worth, not including primary residence, or $200,000 a year in income, you can still invest in real estate related products. In fact, you can invest in individual notes, which is gaining in popularity and actually, truthfully, becoming harder to find quality first position notes that you can invest in as an individual. Hence, I think the pool is a much easier way to invest for most people nowadays. But if you're not accredited, it's not your fault, and you need if you're looking for another option, we do work with non-accredited investors, and we put them in, or we give them investment options in terms of individual notes. And these individual note sizes can be anywhere from $50,000, all the way up to over $1 million.
Yeah, and it's funny because when I've talked to people about hard money loans, investing, they go, I don't want to invest in seconds. They don't realize that.
That is the old dated idea of what a hard money, because most hard money loans before 2005 were seconds, or many of them, I should say. And in fact, the hard money lender, and when you're thinking about, a lot of people when they think about hard money, they go, oh yeah, you're guys that make seconds to people in distress.
Yeah.
Which, again, used to be a significant part of the business model. Someone would, a homeowner, who's against the ropes financially, something's going on, and they want to borrow against the equity in their home, and oftentimes with no idea or plan as to how they're going to repay it, the lender at that time didn't care because you had the equity, you want to borrow against it, you're a big boy, I'll make you the loan, you don't pay, I take your house. Well, let me just tell you, for the most part, those loans now are illegal.
Wow.
So I can't make a second on a primary residence to someone who can't afford the monthly payments. That is now no
That's
longer,
the criteria.
that is illegal under the new Dodd-Frank anti-predatory lending regulations. So here's the flip side. I got a call last week from a couple who are on Social Security. They live in Marin County. They have a small remaining balance on their mortgage, and they have over $1 million in equity in their home. They wanted to remodel the home and sell it and downsize. Well, when we did the calculations, we could not make the numbers work. Their income was insufficient for them to qualify under the debt-to-income ratios. Many of you listeners may have heard the term DTI ratio, that means debt to income. That's a calculation that we are obligated to make now on all loans to a primary residence to ensure that we're not making a loan that the borrower can't afford to pay. So here's a situation where they want to borrow the money. They could have borrowed enough to basically
Just pay off the first.
and you could even, we used to make these loans. If someone didn't have the money to make the monthly payments, we would just make them a slightly larger loan, build in or bake in maybe 6 months worth of interest, because they're going to remodel the property and sell it.
Yeah,
right?
makes sense.
Exit strategy. Now that loan is no longer legal, and I don't know that that's necessarily in the best interests of all consumers. So again, double-edged sword, all of this stuff. There's no perfect solution for,
Tell him to get a part-time job, making $100,000 a year, then he's got the income.
Right. So getting back to the what if I'm not an accredited investor, can I participate in private lending? By the way, you may have heard the term trust deed investing or note investing. Those are all really the same things as private lending. It's used to describe the fact that your money is being used for a loan, for a promissory note, and secured by property, and if you invest with us, it'll be property in the Bay Area. I do want to add one more thing. It's a lot of people in this business, in my business, in the private lending business, who are brokers, will allow you to participate fractionally in a loan. Let's say you have $50,000 and you love the idea of making 8 or 9%, maybe even as high as 10%, depending on the note rate and what the broker is offering you. Maybe the loan is $250,000, and maybe he's going to put 5 people in there at $50,000 each, or maybe he's going to put 2 people at $200 and 1 person, at $50. So there are ways you can participate fractionally. Again, for more information on all of this, there are actually some good books out there that you can get on the internet about private lending, or trust deed investing, as it's typically called. A trust deed, of course, is what we call a mortgage in California. Essentially the same thing, although there's some legal nuances which are boring and totally not worth explaining.
Yeah, but also they can come to your first seminar.
You can come to the seminar at on July 11th at 7 p.m. at Piatti Restaurant, and again, go to our.
No, not July 11th.
I'm sorry, July 16th.
July 16th.
Thank you for the
If you
question.
show up July 11th,
Yeah,
nobody's going to be there.
Wednesday, July 16th, Piatti Restaurant in Mill Valley. Give us a call at 415-883-2150 for more information. 415-883-2150.
Perfect. Thank you, Mark. Okay, here's our thoughts of the day. The movie, As Good as It Gets, was translated in Chinese to Mr. Cat Poop. I don't get it. I don't understand.
It's like those tattoos on the backs of some girls. They think it means peace, but it really means something else.
Something else, okay. And when Buzz Lightyear went on a date with Martha Stewart, he took her to infinity and Bed Bath & Beyond. That's pretty bad. Okay. Tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.